My name is Abhishek Rakshit, and I look after the core markets of the South Asian economies. So Mr. Dang did talk about some positive news for the Indonesian coal mining industry. And since I don't have that privilege, I wish my presentation came before him. Uh, so that we could go to the break with everything positive. But anyhow, we have to be on reality. So let's talk about India. Can we go to the first slide, please? Yeah, thank you. So before we go into the demand and supply dynamics of Indian coal industry, let's first have a brief on how India's economy is doing and where it is expected to be in the near term. With real GDP contracting by larger than expected 23.9% year on year in the April to June quarter, and the new daily confirmed COVID-19 infections sustained at about over 90,000 since the start of September. IHS Market downgraded our fiscal year 2021 forecast for India to a minus 10.9% decline from the earlier minus 6.9%. The country's strict nationwide lockdown to battle the spread of COVID-19 infections shut down most of the economy for nearly 2 months. And while the government has taken steps to unwind lockdown restrictions, a portion of major urban and economic areas remain under strict containment measures because of rising infection rates. And the virus has also spread to the rural areas. The weak containment of the virus is impacting the ability and willingness of the population to go out of their homes, be it for work or for shopping, which has significant negative ramifications for the economy for the next 6 months at least. We expect that uncertainty about health and safety, not to mention weaker business revenues and household income, are likely to undercut the country's recovery in fiscal year 2022 as well, explaining why we expect real GDP growth of just 9.2% for fiscal year 2022 after such a large GDP contraction this year. So the upgrade to our forecast for fiscal year 2022, which is 9.2% from the earlier 6.5%, is primarily numerical, but is also owing to the expected delayed private sector recovery. Stimulus measures worth 10% of GDP, which was announced in mid-May, included previously announced monetary stimulus as well as government's first fiscal package. Now, there are some signals that the government is open to further fiscal stimulus, but it will not arise soon. Since September, we did observe some recovery in India's overall economic activity, but the momentum is not strong enough to help India post a single-digit GDP decline this year. Can we have the next slide, please? So analyzing how India's industrial sector performed clearly highlights the gravity of the impact COVID-19 had on India so far. A look at India's Purchasing Managers Index or PMI, which is published by IHS Market on a monthly basis, since April clearly highlights the overall path India's economy have gone through since the start of the pandemic. Now, the PMI is a measure of the prevailing direction of economic trends in manufacturing. The PMI is based on a monthly survey of supply chain managers across 19 industries and is based on 5 major survey areas, such as new orders, inventory levels, production, supplier deliveries, and employment. The headline PMI is a number which ranges from 0 to 100. A PMI above 50 represents an expansion when compared with the previous month. A PMI reading below 50 represents a contraction, and a reading at 50 indicates no change. We can see that the PMI started to recover from August, which highlights that India's economy has finally embarked on its path of recovery. And look at the indexes such as index of industrial production or the index of 8 core industries also highlights a similar story. So can we go to the next slide, please? Yeah, thank you. Now let's have a look at how India's coal demand side fared so far. Uh, if we look at the impact of the pandemic on India's coal demand so far, it is shocking to see that the overall consumption in 2020 till August fell by around 80 million metric tons, or 12%. All the major coal consuming industries recorded double digit decline in output growth. Overall subdued trends were witnessed in case of output from almost all the industrial units, including cement and sponge iron. During the lockdown period, almost all the coal consuming sectors such as cement, captive power, sponge iron, and other small scale industries were either shut or operating at very marginal utilization rates. Even after the lockdown was withdrawn, the industrial sector continued to operate at low utilization rates, owing to subdued market demand and monsoon season. Now, the monsoon this year started quite early and remained quite strong, uh, thereby further straining the already stressed economy. However, we can see the post monsoon recovery in industrial activity, and the output in the last quarter of 2020 is expected to remain reasonably strong. Now, demand in the last quarter, which also is the season of festivities in India, remains comparatively strong. However, a negative factor, which again has the potential to impact the performance of sponge iron sector, is the looming risk of domestic iron ore availability in the country. Can we go to the next slide, please? Power generation is yeah. Power generation, which was categorized under essential services, could operate business as usual during the lockdown. However, the significant fall in overall demand of electricity kept the generation under check. A fall in electricity demand can directly be attributed to the lockdown of industrial sector, which contributes to around 40% of India's total electricity demand. An analysis of India's total power generation figure during March to September period shows that overall electricity generation declined by about 8% year over year. Now, the impact was even higher for coal-based generation, which declined 13% year over year during the same period. The impact was also felt in the share of coal in the total generation mix. The share of coal in India's power generation mix fell to 67% in March to September 2020 period, compared to 71% during the same period last year. Strong monsoon rain leading to good hydro generation also affected coal burns during June to August period. However, as monsoon started to retrieve since September and industrial activities started to gain momentum again, reliance on coal-based power started to pick up again. Can we go to the next one, please? Now, this slide shows the overall situation that India's coal-based power sector is facing for quite some time now. We can see that the average plant load factors of coal-based power units have been on a decline for quite some time now. So this is a structural issue that India's generation sector is facing at present. A significant capacity augmentation process was undertaken in India since 2011, without proper demand forecasting or taking the possible role of alternate energy sources into consideration. Now, this has led to a situation of overcapacity in the market and thus high underutilization of installed coal-based projects. India currently has around 60 gigawatt of under construction coal-based capacity. Now, most of these developers are finding it quite difficult to commercialize such projects, uh, uh, either owing to financial stress or a lack of interest from power distribution companies to enter into power purchase agreements. Can we go to the next one, please? Yeah, now let's have an overview of how India's domestic coal supply market performed so far. Uh, when we look at domestic supply side, coal production was not directly affected by the pandemic. The production rate, however, had to be curtailed owing to lesser offtake or purchase by the end consumers. Overall coal production during the period recorded a marginal fall of just around 2%. Uh, purchase or offtake by the consumers, on the other hand, recorded a fall of about 9% or 45 million metric tons. This gap between demand and purchase led to a buildup of record stocks at pit heads of coal miners. Can we go to the next one, please? Now the situation when it comes to coal imports market is even worse. Thermal coal imports in 2020 till August recorded a decline of about 26 million metric tons or 21%. Although the demand is recovering, imports demand is expected to fall further for the rest of 2020. Indonesian origin coal faced the greatest burden of this decline in demand. Share of Indonesian coal in India's total thermal coal imports during January to August 2020 period fell by over 27% on a year-over-year basis. This is the greatest fall among all the coal exporting sources to India. Indonesian coal share in the overall mix also declined significantly from 64% last year to about 59% this year. And the primary reason behind such a high fall in Indonesian thermal coal imports can be attributed to the lesser sourcing by the power sector. Can we move on to the next one, please? Uh, Now, as highlighted previously, the greatest decline in coal demand during the period here came from the power sector. IHS Market found out that during January to August 2020, overall coal demand from the power sector alone fell by a staggering 46 million metric tons in total. Further in India, power sector is generally accorded the highest priority in domestic coal allocation. Thus, in case of domestic supply shortage, non-power sectors are supplied coal only after satisfying the demand of power sector first. This makes non-power sectors highly vulnerable and significantly reliant on imports. However, this year we can see that India is sitting at a huge stockpile, and because of that, the government is now urging non-power sectors along with power sectors to start using more of domestic coal. Uh, and this is also affecting the imports market significantly. So overall domestic coal supply to power sector this year from January to August period declined by about 9% on a year-on-year basis. The next one, please. Now, coal imports by the power sector declined by about 24% year on year during January to August period. It is quite evident from the graphs here that the greatest decline in import came from government-owned power plants. At the back of subdued market demand and record availability of domestic supply, Indian government has directed all the government-owned power producers to replace their import requirements with domestic coal. The government has further requested the private power producers as well to offtake more of domestic coal. In another development, India recently did away with the earlier requirement for power plants located at a certain distance from domestic mines to use washed or blended coal with ash content not exceeding 34%. Now, this requirement was one of the reasons for many power plants to import low ash coal and blend that with high ash domestic coal before firing in the boilers. However, with this requirement now removed, further pressure on international coal market and particularly Indonesian has been applied. So, can we go to the next one, please? Now, the gap between domestic production and offtake kept on increasing since the start of 2020. On one side, it was because of the record coal production during the first quarter of the year, and on the other side, demand or offtake of coal kept on declining owing to COVID-19 outbreak. This led to a significant buildup of coal stocks at pitheads, which reached an all-time high of around 79 million metric tons by May end. Similarly, the coal stock at power plants have also been hovering at very high levels and peaked at 51 million metric tons in April this year. Although with pickup in demand, inventory levels have started to come down. Uh, but still they are very high in comparison to previous years. I mean, at the start of October, India was sitting at a thermal coal inventory of about 115 million metric tons, which is ready to be shipped or utilized. Means as and when the demand starts to gain further momentum. The next one, please. Yeah, the next one again. Yeah, thank you. So in summary, I mean, considering all the statistics that we have received so far, imports to India in second half of 2020 also looks weak, although it is expected to be significantly better than the first half. Apart from subdued demand, the biggest challenge for imports market remain the huge inventory of coal spread across pitheads, plants, and even ports. Hence, considering all these factors, IHS market estimates India's thermal coal imports in 2020 to be down by around 37 million metric tons in comparison to 2019. Now, out of the total 20, so from January to August 2020, we already saw a decline of around 26 million metric tons in imports. Now, out of this total decline, around 85% of the fall was of Indonesian origin. And for the remaining 11 million metric tons of fall that we are expecting for the last 4 months of 2020, Indonesian coal is expected to continue to take this major hit. This is because the recovery in imported coal consumption by the industrial sector has been far greater than that by the power sector. Then again, domestic coal being offered to the power producers are ever increasing. For example, during April to September this year, uh, Coal India Limited's sales through auction route increased year on year by about 65%. In terms of volume, it is about 16 million metric tons. And the major share of that sale went to power sector. This is all that I have from my side. Thank you again for this opportunity to be a part of this session.